I'm going to get to the markets in a bit. The management at Dabur India is ready with us. So let me get Mr. S. Raghunathan, Chief Financial Officer at Dabur India, to talk about the numbers which have come through just a while back. Consolidated sales have come in at about 1,080 crores. That's a 16.5% jump compared to the same period last year. Net profit is up 11%. At 155 crores. Sir, afternoon. Thanks for joining in here on the show. Prashant, this side. I'm going to get to segments in a bit. I see that raw material expenses have gone up almost 22% compared to same period last year. Can you talk about that and also just give us some kind of outlook going forward, because prices for most inputs have moved up through the course of the last couple of months or so.
Yeah, the prices have been firming up continuously, particularly both the vegetable commodity-based prices like oils and coconut oil and stuff like that. Similarly, also packaging material has been going up. Hence, we have felt a bit of a pressure from the overall material inflation. But however, we were able to manage our EBITDA margins very well. If you notice, we are able to hold our EBITDA at 20% by a combination of internal cost savings in our conversion cost and also a judicious management of our ADPO expenses. That's in totality. Looking forward, yes, we would feel that the commodity inflation is going up. Maybe it has peaked. We will expect that this kind of commodity cost pressure will continue at least for a couple of quarters, and beyond that the picture can get a little clearer. We are hoping that it is kind of peaking at this point in time. That's a broadly outlook we will have.
Raw material expenses as a percentage of sales, what does that stand as of the December ended quarter? And what's the outlook? What would you like to keep that at?
Yeah, it is around 47-48% to sales. Yeah, and hopefully we will continue to keep it around that level. We are kind of stocked up in little advance in terms of going on physical covers, etc., which would help us. But broadly, we'll be in the same range as what we are in this Q3 also.
Sir, last quarter, second quarter, this fiscal, you had, the hair care business, which is the largest business vertical for you, that had degrown. That had seen a degrowth. What's happened this quarter?
Yeah. The hair care in totality has grown at 4%. In that, the hair oil component has grown at upwards of 12.5%. Shampoo business has kind of declined even in this quarter. But towards the end of the quarter, in fact, towards the last week of December, we have changed our value proposition in our shampoo, and it has just gone into the market. So the initial response has been good. Hopefully Q4 in shampoo business will report a better performance. But in totality of hair care, it is a growth in this quarter at 4%.
4% compared to same quarter last year. All right, fair enough. What about other segments? Oral care, skin care, health supplements, digestives, foods?
All those segments, other segments continue to do well. Healthcare, particularly toothpaste, has grown at upwards of 18%, with the oral care growing at 15%. Tooth powder is a small marginal growth. The toothpaste business has grown at 18%. Our skin business has grown well upwards. Foods business has grown at 40%. So across the board, but for a little soft growth in hair care business, it's an across board growth.
So what do your acquisitions, Fem, Hobby and Namaste, how have they done in this quarter?
Fem has done very well. It has grown upwards of 20% in this quarter, within which bleaches, which is a key part of the Fem business, has grown at 26%. Hobby acquisition has just been completed. It is effective of 7th of October. It is less of a quarter. It has given around 26 crores of top line. Namaste acquisition is effective 1st of January, so it has not factored into the Q3 numbers.
These three acquisitions, in terms of the sales contribution to the overall entity, what does that stand at right now? And earlier you had mentioned that longer term you'd like the international business to be almost about 30% of your total business.
Yeah. So today with Namaste and what do you call it? Our international business
Right. Okay. We're getting some disturbance there. I'm just going to go back to Mr. Raghunathan in just a bit. If you've got that line clear now, I'll go back to 3.5%. Okay. Please make that point, sir.
Yeah. See, we will be, our international business will be upwards of 20% once these acquisitions are completed on an annualized basis.
Right now, sir, what do they stand at?
The reported quarter we will be around 16 to 17%.
16 to 17%. Because margins in international business are much higher, right? Almost 500 basis points higher, EBITDA.
Yeah, margins in international business are much higher. The inflation pressure is also so far less in international business, which has helped us.
Okay. Full year, sir, would you like to put out any guidance? What are you expecting?
We don't give any specific guidance. We should continue to do well in terms of volume-backed growth. We have taken some price increases during the quarter. And yeah, we would be happy to hold our margins the way in which we have been doing it.
20%. Okay. Good talking to you. Thanks for joining in. Good luck. Appreciate your time here on the channel.
Thank you very much. Thank you very much.
Dabur stocks up 3.5%. It's underperformed the broader FMCG pack for about 6 months now. 94 odd rupees on Dabur. 3 rupee odd gain. 60 points off on the Nifty. Back to the market. 54.52. Right,
let me just run through some of the stock movers and then we welcome in Satish Pitatpur. So it's 1% off on the Nifty, 1% and a bit more on the Sensex. You've got the bulk of the pressure still coming in from the realty pack. You've got the realty index down nearly 4%. You've got